Let's get this chat on the go. Let's get going for the day. How you guys doing? Good to have you on board. Let's get started. I know it's a couple of minutes early, but it's always good. Humans are creatures of habit. Maybe I'm just breaking the habit a little bit. Don't forget, most traders lose money. If you're unsure, you probably shouldn't be trading. Shall we have a look at what we've got today? First thing I've got to do is move this out the way for you guys, because someone did mention to me that it's in the way sometimes of the chart. So just taking it out of the way of the chart. And then we can get started. Don't forget, my goal is not to make you rich, but to make you competent in the markets and to survive the markets. I'll tell you a wee story about the markets. When I started trading 30 years ago, I didn't have any money, and we didn't have leverage trading, what I call geared trading, and we only had pens and pencils. Can you imagine that? And we started trading with a few bucks in our pocket. I think I started with like $1,000, and I can tell you what, in those days it was like R1,000,000 today, but back then it was tough. And basically you had to draw a line through the chart, and if it was above the line you bought, and if it was below the line you sold, because they told us, don't just buy into the market and sit and forget, because you can get all the downsides all the way up, all the ups and downs, and that's what got us into trading back in the day. Imagine, that's what got us into trading, the thought that you don't have to just invest, you can actually buy and sell and buy and sell all the way up. That's what got us into trading back in the day. How's it, Kevin? Hello, Shane. Good to see you again. Sorry, Shane, your trade didn't work out. What? What was it? The Great British Pound, Aussie dollar. Yeah, it backfired. It was, it was $200 up. And I went away and I had dinner and I got the email that it stopped out. That the trailing stop got caught out. I thought, how's that even possible? Crazy stuff, eh? Yeah. Yeah, no, Kevin, the S&P 500 is really not going, is it? Now, my concern for this is, I did get in, obviously, because we trade what we see, and it looks like a reasonably good trade, and it looks like a good long trade, so we got into it. Trouble is, I'm looking at this and I'm listening to, things in the background, think people saying things like tariffs, and he's going to increase tariffs on Canada and Europe and all this stuff. And that could really affect us. Now they're talking about, bombings and all kinds of stuff. So, yeah, that always concerns me when I hear these little whispers in the background. But that's what the markets do to you, unfortunately. So you have to try and put it out of your mind, because at the end of the day, the main reason these markets move around is because of the flows of money. And at this time of the month, I guess, they're paying people, they're paying salaries to the army, they're paying salaries to the municipalities and all that sort of thing. So it's going to affect the money flows in the country, and that's going to affect the way the markets move up and down at the end of the day. And then we equate it to what people say in the markets, and we equate it to rises and drops in interest rates and all that sort of thing. But that's kind of neither here nor there. The actual movement in the market is behind the scenes, the stuff that we don't really see, the big money moves, the money moving and flowing from the reserve banks and things like that. Those are what cause the big moves at the end of the day. Yes, a president standing up and doing something silly can cause a market to move. Of course it can, because we're human beings, and human beings are watching this, and we see these things happen, and you sell all your shares because you saw this happen. That's a fact. You can't get around that. But most of the daily money moves are caused by the money moving around in the country, let's say. So, yeah, more than anything else. And, the first thing I thought of, Shane, I had a good laugh, because the first thing I thought of, I'm having my dinner, I read the email, and I think, how could we lose on this trade? Oh, yes, Shane did say do the opposite, and I didn't listen to him. I was just laughing. Sorry, Shane, it was just a joke. That's not the truth. At the end of the day, the markets are 50-50. And no matter who takes, if it's me or if it's you, it's Kevin, if it's anyone else, it'll happen to you, and you just have to deal with it and keep on moving and keep on pushing through, and be positive. It'll work out at the end of the day. It always does. It's just if you follow the strategy and not so much the system, you'll get there. There's a couple of guys that are working with us here that are still stuck on the system, still stuck on it's the lines and the candles that are going to make you the money, and you have to kind of get past that, and you have to kind of understand that at the end of the day, you've got to follow strategy to make the money, because if you keep on following the systems and the lines, then somewhere down the line, it's going to fall short. It always does. Look, when I got into trading at a very young age, and like before we had computers, like I said earlier, I was one of those guys who obviously thought that this is what's going to make you the money. But that's what I was taught. I mean, I was told that the markets don't go up in straight lines, and because they go up and down, you make a profit when you buy low and sell high. And that was as simple as it got: buy low, sell high. And I believed that the system was what was going to make you the money. It took me years and years to figure out that, wait a minute, you actually need some kind of strategy here. You actually need some kind of proper business plan here, and you really need to work this out. So, at the end of the day, what you're getting out of my 30 years of experience is a lot of that experience is kind of bad experience, where things went wrong, where I had to learn from experience. And those are the best things to find out from me, and you don't have to go through it. You don't have to go through that process of finding out that this doesn't work, let's say. And that's actually a fail. That's a big fail. Because what actually happens is you end up taking trades left, right, and center, and then you just see that you've won a few trades, and you see that you've lost a few trades. The losers are more difficult to get over, obviously, but you don't see the bigger picture, and it's actually a long time to figure out that there is a bigger picture behind it, that you have to have some kind of plan to kind of make a profit out of this business. It's like if you put if you go and buy products for your shop, and you buy them at a certain price, you want to put a markup on there. You want to make a profit on it. You don't want to break even. You don't want to go and buy 5 products and then sell them at exactly the same price. You want to sell them for more. And that's the basic basis of the stock market as well. You want to make more on the profitable trades than you lose on the losing trades at the end of the day. So you're going to pay school fees, but you want to make a profit on it at the end of the day. Pretty straightforward at the end. That's how it works, let's say. And it takes years for people to get around that, and it takes years for people to figure that out. Just that was a quick story, wasn't it? Yeah, no, that's Kevin, I can't even, I don't even want to speak about a Trumpy anymore, because I hear it from all sides here, and he is really annoying. Could I suggest that the S&P was trying to fill the gap? Yep, you can suggest that, and there's the gap. There's the gap, and I don't think it's filled it. Has it filled it? I think it might have filled it. Let's just see. Yep, it probably filled it. But no, actually what happened yesterday, as I say, Shane, the real truth behind the matter is, besides these nasty little candles and charts and what have you that we trade on, yesterday payments were made, money was taken out of the system, so it will affect the markets. It will pull the markets down. That's how it is. Government officials have to be paid and so on, and the police and the army and all that sort of thing in America and around the world in other countries and what have you. And it pulls money out of the system. I don't want to get into too much depth about this, but that the reality of the matter is that as human beings living in countries, we actually there's not really a necessity for a tax system. There's not really a necessity for working people to pay tax. You shouldn't have to pay tax, because effectively all they're doing is giving you the money so that you can pay it back. It's a long story, and it's very, very complicated. But at the end of the day, you don't really need to charge the population tax at the end of the day. They can draw that money from different ways and different areas. It's actually quite an insane system, but I don't want to go into depth about that because it does get overcomplicated and it does get very messy. But this is why I say that, this movement in the markets has really got nothing to do with or the actual filling of gaps, or this moved up or that bounced off a trend line or whatever the case. It's got to do with the way the money is moving in the country. What we're looking for here is pretty simple. We're looking for a high probability. We're looking for liquidity. We're looking for where other traders have put their money. And it's funny how the gaps fill into the news. The lines fill into the news and fall into place. So you kind of reading everything off a chart as to what's happening in the background, the reality of what's happening in the background. There's real things going on in the background and you're reading it off a chart. Hi, Rob, US dollar CAD, 144 pips. Thank you. Yarek, hey, good show. Well done. Did I miss that trade? Oh, you got it the other day. Okay, so I'm looking for a new long trade here, guys. You know that, eh? I'm looking for a new long trade. I did put it on trade of the day. So I'm waiting for my next long trade so we can make another nice big profit here. We should have got a short up here as well, but I didn't. But I'm looking for another long trade off the bottom here. It'd be nice because, I mean, look at it. It's just in a wonderful range, eh? It's just sitting in a range. We trade three ways, eh, guys? We trade with the trend is your friend, we trade in the range, up and down, and we counter trade when it breaks the trend. That's so simple, it's unbelievable. I'm about to trash my small account on gold. It just won't break the top. On small account block. Okay. Sorry, Shane. I don't know what you did there, but sorry to hear that you blew a small account. But what did you do exactly? This is gold. I'm on the gold here now, and I'm looking at this, and I'm seeing the double top here. I'm about to trash my small account on gold. It just won't break the top. No, there's a double top here now. It's just created a nice, wonderful double top. I'm going to move that line up there so you can see it. There's your double top now. Double tops are tricky. Let's see what happens with it. Can it break through, or will it come crashing back down? I've been saying to you guys all week, while I'm bullish on gold, I've been expecting it to sort of just come down and sit around this 3,000 for a while. I'm thinking it might just create a range here. You went long and it pulled back. Okay, yeah. You see, if you'd long would have been a good trade from here, thinking, okay, this would be a good long. And then the long should carry all the way up to 3,100. But obviously it's not happy about getting past that area. Euro US dollar is now near support levels. Do you think it will go near 105.7 Euro US dollar? Where are we? Look, at the end of the day, there is a kind of a small support here, midterm support. It looks to me like it kind of broke through it. If I look at this, and is there any more support? It's weak support, if anything. I'm thinking that we're still good to go to the downside all the way down to here, at least the 106. It looks kind of open down here. Looks nice. And if you draw a line across here, we're still in our structure. We haven't broken structure. Kind of hoping that that's going to hold. That holds. There's a whole big open space here. I get you. But there's the support a little bit higher up. So I think it's kind of broken through that. It's going back to retest it. Let's hope the test fails. and she comes down. But this is a weaker support. Your main one is down the bottom here, and this thing could go all the way to 103. Actually, could really go far. But I'm going to hold the trade. I'm going to hold on. I think we have putting a trail and stop in. So we lose out. We lose out. But I'm kind of hoping that she'll fail the retest and came flying down, and that'll work out for us. So that'll be decent. So let's just go back to the gold here and just have a look at what we got. Clearly, we now have a double top. That was a bit of a pincer top there as well. It's created a double top for you. Not the best scenario, but what it might do now is sort of swing down and then swing back up again. Let's just see what she does. There's some money lying here, by the way. I don't know if you saw it, Shane. On the 4 hour, there's a whole bunch of money lying here at this area, which it might want to pick up and go. Yeah, we'll see what it does. If it did break through, it would have been a goodie. You know, the big thing here is if the US 500 starts to fall, then gold should break up. Are you looking at FIB? Let's have a look at the Euro US dollar on the FIB. Just by the way, Roger's talking about the FIB here. I'm just going to have a look at the FIB level quickly, guys. I don't want to confuse anyone, but it is always interesting to look at the FIB. So I'm going to do that just quickly. Let's just change the color so we can see it. And look on the main FIB. Oh, yeah, I suppose we could actually take it a little bit further. There it goes down there. Okay, from the main low to the main high, it's quite a way to go to the golden zone. And then from that low, even there's quite a way to go to the golden zone, which is here, which is in the 105.70, as you said, in that area. So I think we're good to go. I think it's still above the 38. It's still good. No, there's a long way to go. Even on the shorter one here, if I draw it from here, it's still in this area. So your golden zone's down here, exactly where I've put this level. So this level is 100% in the right place. If it gets to this level, we're in the zone. No, I'm very happy with that. So the FIB is giving us perfect confluence to our trade. This is still way high, and the zone between 50 and 60 is in this area. Okay, so we're still good. Still trying to learn how you draw your lines. G'day, Rob. How's it, Greg? Welcome from Brisbane. How's it? Good to have you. I draw my lines very simply, Shane. I just basically draw them off. Look, I normally draw them off, obviously off the day chart, and I normally draw them off a line chart on the closing prices. But sometimes I'll throw in a trend line, and I won't worry too much even about going to the line chart, and I'll throw it on the 4 hour just to see the trend and just to see if it's breaking through the trend. They don't have to be precise. You know, this business of it has to be exact and precise and on the point and exactly at that point. And if it just breaks through a tiny little bit, then I'm going to... No, I'm looking for a general sort of picture here, because my whole purpose in the market is looking for the liquidity. And when I'm looking for the liquidity, what I'm looking for is an area where the price keeps getting to and the price keeps failing in that area. That tells me there's loads of orders there, so that's what I'm looking for. I could draw the area up there as well, but it's not getting there at the moment. It's quite far away. Here's another area where there was liquidity, but it was to the upside, not to the downside. But that taken into account, if you look at the FIB level, it does play into this area as well. Your support level's more down, the further down at the bottom here, where the price has been getting to and going back up. That's quite a big fall, for example, on this Euro US dollar. So I just draw the lines in based on looking for the liquidity. I make these blockies sort of, if I go to the line chart, you'll see it better. I'll take it where areas where, you know, it gets to at the bottom side and it gets to at the top side, and that sort of level in between there is where all the money is lying. That's what we're looking for over here as well. And that line in the middle, as you saw, I drew it further back. It doesn't have to be exact. Just make it as close as you possibly can, and you'll be okay. And then these lines, I like to draw them on the line chart, but you can move them around, and you can determine, you know, if it's viable for you. You don't have to be exact with these trend lines either. They just have to be sort of generally there and thereabouts. Normally take them from the day chart, but I'll draw it in on a 4-hour chart because I'm trying to see if the trend is breaking. That's all. I'm trying to see if the structure's breaking. And if the structure's breaking and it's in confluence with the support, normal support and resistance, you've got trend support and resistance, you've got normal support and resistance, you've got ranges. And all I'm looking for is change in structure. And that tells me that there's liquidity there, and I'm moving in that area. Yeah, no, I do try and go over it as much as possible in all the videos, but sometimes I think I'm repeating myself too much, but maybe not. You know, it's good to keep on doing it so that you guys get an idea of how I go about it. Because in some cases, I'll draw a line, like a thin line like this, a trend line, even on the day or whatever the case, and I'll draw it on the line chart, and then I'll look at it and I'll see that it's kind of pulled through on the candles, and then I might actually move it around on these tails, because sometimes you just got to do that. Sometimes you just have to move things around and see if it makes more sense. There's no, like I said, there's no exact science here. I mean, even Fibonacci is not an exact science, but it does give you kind of confidence as to what you're doing as well, if you're looking at anything. What I'll sometimes do, for example, let's say I got this, why is that coming up? I got this US 500 trade, right? And let's say I'm totally unsure about this trade, because I'm looking at this, I'm seeing it on this trend line, and I'm looking at it and thinking, you know, this is giving me a headache. Should I, shouldn't I? And you're not sure, okay? So what I have here is a second chart on the day with an MACD on it, and I can put the US 500 on that and just see, what does that look like? And on that, it looks like it's bullish. It looks good. So that just gives me some confluence as well. There's the weekly chart. The weekly chart, okay, that's Euro, Great British Pound, so I can just put the US 500 on there. Weekly chart, it's kind of bullish, but there's a long tail here where the sellers are getting back in. Could be a bit of a problem, but both candles are still green. Looks like it's bouncing out of the weekly support levels. So that looks good for a long run all the way up to here on the S&P 500, and then on the normal day chart as well. On the 5-minute chart, I'm not interested really. That's I just put here just for the sake of it. Okay. So sometimes you just want to get some confluence. Sometimes you might want to just draw, for example, what we did earlier, just draw a Fibonacci in just for interest's sake, if you want to confirm for yourself what's going on. Sometimes you can use an RSI, sometimes you can use volume, sometimes you can just have a look at whatever you're comfortable with, sometimes a stochastic as well. Sometimes I'll just go back and just confirm what I'm doing with that and say, well, am I doing the right thing? Yeah, it looks good. That's confirming it. That's kind of giving me a level as well. But I don't want to obviously confuse you guys with that as well. I generally don't do that. I generally don't even go and look. But sometimes it's worth it if you're just not 100% sure. Ryan, enjoy the channel. Do you ever draw the lines on less than a 4-hour chart? Yeah, sure. Absolutely. You can. There's no problem. The system works on absolutely everything. The reason I take my levels from a day chart and trade on the 4-hour or the H1 or whatever, normally the 4-hour, because I like to relax and walk away and leave things. I don't like to sit here watching charts all day and trading. But the reason I take it from the higher time levels is I always use the analogy, and you'll see it in my videos as well. For 1 or 2 videos, I put it in there, where I say to people, if I was to say to you, You want to test a brand new system to start your billion-dollar company. And you put 5 people in a room and say, go in there, check that system out, and tell me what you think. The 5 people come out of the room an hour later and they say to you, you know what? 3 of them say it's good, and 2 of them say, oh, that's a lot of rubbish. So because 3 people said it's good, that's 3 out of 5. That sounds pretty good to me. Go start my billion-dollar company. Maybe not. Maybe you'd rather have a rather large hall where you put 1,000 people in, 800 people come back and say, oh, that's pretty good. It's a good system. You might look at that and say, well, that's 80%. That looks pretty good. Now you've got a good sample size. Now that's a bit like taking your levels from the day chart against taking your levels from the 5-minute chart. If you take your levels from the day chart, you must remember all the information in one candle is for the whole day. It's good information. It's a lot of trading. It's a lot of money. There's a lot of things that have happened in that day. So all that information's compacted in there. You go to the 5-minute chart, basically you've got 5 minutes of information. It's totally unreliable information, and it's only valid for the next 5 minutes. So that's why I take general levels from higher time frames. The higher the time frame, the more reliable your information. Now you'll find that many of the older traders, better traders, those people who kind of been there, done that, you'll find a lot of them are taking their levels from even higher time frames, sometimes months, weekly, that type of thing. I like the daily because I find it good enough to get my information from it. But once I have that information, that's my daily information. I know that's my daily information. If I'm trading on the 4-hour and I see a supply level, I'll draw it in. If I'm trading on the 4-hour and I see a level, I'll draw it in, or look at it and see it. And I'll look at the levels on the time frame that I'm trading on. All I do is I put my levels from the higher time frame in so that I know where they are. So I know that's my target. I know that's where we're going. But somewhere in between, there's a whole load of little levels on the other time frame that are going to get in your way, that are going to be obstacles for you along the way that could cause you a hassle. For example, this line here, this is drawn in on this 4-hour time frame just to see if it's going to break to the downside or if it's going to bounce and continue on to the upside. This is not a reliable level. It's reliable enough, but obviously it's just a level that I put in there just to give me some picture of what might happen. And it doesn't have to be precise. And as I always say, the system is different from the strategy. The system is the squiggly lines. It's a high probability trade. You're just looking for liquidity on the system. The system's not going to make you money. Win rates are not going to make you money. What makes you money is a business plan and strategy. You have to follow the business plan and the strategy, and that is make more on your wins, lose less on your losses, keep the stop loss the same on every single trade. Follow a plan. Taking trades, anyone can do that. You're going to go on a course and you're going to learn a system. You're going to learn terminology about the stock market because for some other reason that seems important to people. And you're going to come back knowing what to call everything, what to name everything. You're going to come back with all this information. And you'll have done some demo on the course or whatever the case. And you would have thought, this is easy. This is easy. Because I mean, really, honestly, guys, I can teach this to a primary school child. I really can. So you come back and you think, wow, smart, man, I can trade. And you go and put real money in the market, and suddenly the whole world changes. The world changes color. Everything starts turning red. Everything starts like driving you insane. You start sweating. Your heart starts beating. Everything goes wrong. And you start losing trade after trade after trade. And you wonder what's wrong with that system that these guys taught you on the course that you passed with flying colors. You got 95% in the exam of the course. And you came home and you thought, this is easy. Why am I losing? What's going on? Tell you what's going on. It's all about you. It's all about the trader at the end of the day. And if you don't enter the market with a proper business plan and a proper strategy, and it's in every one of my videos, guys, go and watch them. The video, every video I put out, I put the strategy at the end of the video for you guys so that you can go and use it if you want to. But if you go into it without that, you're going to lose every single time. It's always going to end in tears. If you try scalping, it's going to end in tears. It always does, without fail. Why? Because it's psychology, because it's human nature, because human beings are what they are. What you don't understand is you're not trading against a computer, you're not trading against an algorithm, you're not trading against maths. You're trading against other human beings. You're trading with other human beings. It's all money in the markets. It's all people buying and selling. That's what the markets are made up of. They're not made up of maths. They're made up of people that are buying and selling in the markets. Would you go and start a shop on the side in a mall, pay rent and all that sort of thing, and put stock in and shelving and have staff members, or a factory for that matter? No matter, I'm just using a shop as an analogy. And would you do that without some kind of plan, without some kind of knowledge of what you're going to do next? No, you wouldn't, most likely. But for some other reason, people do it with trading. People think that you're going to get into trading and this is somehow a Lamborghini is going to fall out the sky. And when it doesn't, you kind of question why that didn't happen, because the other guy told you that's going to happen and it didn't. So, just understand that it's a tricky game, and it's not as easy. Okay. Street sales GM Rogers all like GPAUD on 4. Looks like we are near sell zone. I like Fib. Yeah, Fib's good. Fib's very good, Shane. Ronald Steenkamp, do you use your own capital or prop firm capital? I use my own capital, but this is prop firm capital. What you're looking at here, this is a prop firm thing that I opened for the group here on the live show so that we can help you guys learn to trade as a group. This is what this is here for. We opened this because I wanted to open an account specifically for you guys, and I would have put a $10,000 or $20,000 account in. And then I thought, no, we don't want to lose that money. And you guys are going to be choosing trades. I'm going to be choosing trades. We're going to be doing this as a kind of a group effort, and you guys are going to be learning from it. So I decided to have a funded account opened, which if this goes pear-shaped, we lose $100. It's not a big deal. Anybody wants one of these funded accounts, like I said, there is a link there as well if you guys want one. It's a good way for people. I actually realized that I was always against them, to be perfectly honest with you. But I realized that it's really good for people that don't have the capital. And if you get these funded accounts and you trade with them and you make some money and you take it out, it really costs you nothing. I mean, you don't have to leave your money with a prop firm. Why would you? So yeah. So now obviously a bit of both. I only started using prop firms. Is it this year, guys? I'm not sure. You guys can tell me. I'm not sure. Because of this YouTube channel, because of you guys, and because we started the live show at the end of the day. Now, there are many reasons that I don't put my cash account up on YouTube and on live. One of them being my account numbers out there, and another one being, people get funny about money and the amounts of money and all these different kinds of things that go on. So I don't play around with that. That stays private. It's like a bank account. But all my investments, for that matter, that's also another thing on the side as well. But for training purposes, this is excellent. This is absolutely great. And this is a funded account that we play around with. Okay. Trading is the hardest way to make easy money. And Henry, that is so right. As I've always said to you guys, trading is hard, guys. It's not easy. And just because I have been trading for 30 years does not mean I'm a better trader than you. It does not mean that I can do it better than you. There's so many guys out there that can trade so much better than me. But it's all in their mental state, their psychology, and whatnot, and how they do it. But like I say, as I was saying earlier, the whole reason I started the channel was because I saw a couple of people saying you can buy a Ferrari after trading for a week, and I thought, well, that's a bit off. But that said, I don't diss anybody out there as far as I'm concerned. You can learn something from absolutely everyone out there who's putting information out on trading. You can learn. You can watch a video, read a book, whatever the case. and you'll get something out of it. There's always something there, because at the end of the day, what they're teaching you is basically what's in front of us here, which is lines, little squiggly lines. And what I've told you is this is just high probability. And if you learn this, then you've already halfway there, because you've learned the high probability trading. And then all you have to do is put the business plan in place, put the strategy in place, get your psychology right. Once you got your psychology right, then it becomes so much easier. Learn to sit on your hands, get over the FOMO, fear of missing out, get over the fear, take the trades when they're available to you, so on, so on. Get going with it. And then you can get ahead with that sort of thing. Shall we go and have a look at the news, guys? Shall we go and see what's on the news today? Let me go and have a look. This always is a little bit complicated for me because I have to move things around here. Maybe one day I'll get better at this, but for now, this is me on YouTube. And I think I'm not too bad at it. I'm actually okay. Getting along, as they say. Okay, so what's on the news? My face might be in the way here. I'm not sure. Trump, Canada, EU face larger tariffs if they ally in trade war. Now, this is, of course, a concern for us on our S&P 500 trade and for all your investments as well. Canada, EU face far larger tariffs if they ally in a trade war. In other words, he wants to give them bigger tariffs if they stand together against the USA. That is not going to be good for anyone. That'll actually be quite bad. Bank of America mortgage applications jumped 80%. That's pretty good. What crypto watchers want to hear. Yeah, this hike is heavy into the crypto, eh? The Fed has a new favorite word, uncertainty. Yeah, that's always interesting. Musk says impact of auto tariffs on Tesla is significant. So I thought Elon Musk and Donald Trump were big Chinas. I mean, if it's going to affect his company, I mean, what's going on there? Yeah. World Bank, South Africa have $3 billion city rescue plan. Okay. Living in South Africa, you see things like that, because I know we're in trouble with this whole thing where he's not sending us any money, so maybe there's a way out of that. Yeah, that's the news. Not much going on there. All right. And I heard something about him threatening Iran or something like that, but I don't see anything here. Oil holds gain. Oh, I forgot about oil. We need to go back to oil and see what's going on there. Here's the trades of the day for those guys who didn't get it. That's just the funded trader account stuff. Sorry, guys. Yahoo. There we go. Okay. Let's just go back to the charts. That's where we need to be. There we go. That was easy. Put it back. Alrighty. So as long as you know that we trade three ways and you trade on these charts, you'll be fine. You think we should go long on gold even though it's a double top? It really is trying to push through, isn't it? It really is trying very hard to push through. What's Bitcoin doing today, by the way? Yeah, it is still short. It is still, I was calling it short and it is still short. So nothing much going on there. And Brent, we wanted to look at Brent. Let's see, Brent. See, we got knocked out over here in a profit, and I wanted to see if it was going to break through this level and go, and it looked like it was going to, and now it's come back into this level. Not much going on here. Not much going on here. Brent is kind of holding station. Shane wants to take a long on gold. Perhaps you should wait for it to break through. Break through that yellow line there. Hey, Grizzo. Welcome. See you. You've arrived, at least. That's a good thing. Shane, using fib extension. Okay. I'd still just wait to see if it breaks through there. That would be fair, I'd say. And he wants us to break down the Brent crude oil Okay, we can do a breakdown of this. Do the opposite to Shane, by the way. Just by the way. Maybe we should all short gold. Funded trader, yeah, Ronald. Sorry, Ronald, I didn't know you were asking. Yeah, it's funded trader markets there on the top left. Funded trader markets. This is C trader from them. Funded trader markets. Okay. Yeah. You know, I can't tell you which prop firm's good, which prop firm's bad. All I know is that these guys don't give me any hassle and they don't mess me around or whatever the case. But like I say, if you make a profit with any prop firm, just take your profit out. Don't leave it there. Everyone's having a laugh now, Shane. That's the way. Okay, so Ellie wants me to do start to finish with crude oil charting. So, okay. Let's just have a look at what we got here. Here's Brent crude. And as you know, we had a long trade from here and it went up to this level here. That was taken out on a trailing stop. So don't let that confuse you, Ellie. What actually happened was we had a trailing stop on the long and I pushed it up really close. I can't remember if it was close to a Friday or what was the story, or if I just felt that this area was a supply of money. Okay. Now, Ellie, just don't get confused because I don't think I've taught you supply and demand yet. There is a video in my system for supply and demand that you might want to watch, but we'll get to that. This is the support. There's your resistance. This is a supply level of money. It's slightly different. Where we look for supply of money is on the time frame that we're trading on. And if you have candles, you see you've got this green candle here, and then afterwards you've got red, 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 red. If you've got 3 red candles or more, you've got a supply of money in this level. You take the size of the green candle before the red candles and you draw out the level. That's a supply of money. Okay, that means there's orders lying in that area. The reason we think there's a lot of money there is because of the huge push down. Okay, the reverse works for the way up. Now, this level we drew in. So when this got close to that level, I probably pushed the trailing stop up close to it and it came back and took it out for a profit, which is acceptable even though the target was further up. Then my decision was, if it breaks through this level, breaks through it with a clear breakthrough, because remember, these are not exact lines, eh? If it breaks through with a clear breakthrough, then I'll go long again. Most likely above the 74, because there's a top, there's a top, there's a top, there's a top, right? 74. Let's just show you that. See, those are the tops, okay? Around about 74. So if it was to break through that 74, then I would have said, okay, we can go long again. Take another long and take all that money to the top with the stop loss over here. But what happened? It's come back into this level. Now it's either retesting it or there's not enough money. Well, there would have been enough money to push it down, but it's taken all that money. But maybe there's enough money here to start pulling it down again, or there's enough traders in the background pushing it down. So what we have to do is just wait for clarity and see if it's going to break out of the supply of money, give us the 74 and carry on going to the upside. And why did we take these levels? If we go to the day chart, you can clearly see on the day chart, we're in a range. Now remember, we trade 3 ways. We trade with a trend is your friend, we trade in a range, and we counter trade. So we're trading in a range here. The range is you sell off the top, you buy off the bottom. Simple, really. Okay. And what we got over here on the day chart was a clear breakthrough on this simple trend resistance line that we drew in. It broke through that and headed on towards the upside. And that's why we had the long trade here in the first place. We took these levels from a line chart. The reason we take them from the line chart, closing prices, eh? You see, every time it comes in there, it comes back. It comes in there, it comes back. Comes up there, comes back. Comes in there, comes back. This is an important level. Every time it gets down to this support, comes in, goes back, comes in, goes back. Every single time it goes back. Important level, which means there's money here. That's all I look for in the markets. is where's the money? Where's the liquidity? Where are they sitting? Where are the orders sitting? They're obviously sitting in that area. And when it comes to supply and demand, that's just an extra I add on the lower time frame on the candles. So by the way, so that trade was taken. It went long and it got taken out. Why didn't I get back into the trade immediately? We'll go back to the 4-hour simply because I wanted to see if it will break through that and head on to the upside, or if it's doing what it's doing now, which is milling around and not getting through this level. So that's what I was waiting to see. A little bit of confirmation goes a long, long way, and a little bit of patience goes a long, long way in the markets. So obviously the support and the resistance you saw now was drawn from the day, and this little supply level that I've drawn in here, I've drawn in on the 4-hour as an extra. These are little obstacles that get in the way in the middle of your trades, which is why we traded out or got traded out over here. Now we're sitting to wait and see if we're going to get back in or not. Never revenge trade. If we get back in, it's a completely new trade. It's not the same trade. It's a different trade. Okay. Right. Yeah. You know, Danny, I have tried the Ichimoku and I've used it a couple of times, and I thought it would be the most amazing system, because if you look at it theoretically and you work on it theoretically, you think, wow, what a system. Can't go wrong. But it didn't work for me. Well, you know, when I say it didn't work for me, it just takes too long to do what you want it to do. And I actually can't remember exactly what the situation was. Very much lagging indicator situation, I think, more than anything else. But, you know, with it going, you're trading it on that side of it and this side of it, the whole story, you know, it's a bit, I don't think I've got Ichimoku on here to put on, but yeah, it just, you know, waiting for it to cross over there. And I can't even remember the terminology and the names. It's a few years ago that I used to trade with it and used it. But it was a fantastic looking system, and it looked like it couldn't go wrong with all the terminology that was in there and what have you. But I gave it a try, and it wasn't working. I think it was just too lagging, and it just didn't work out for us. So I just left it behind. Effectively, it didn't make me any money, and I just left it behind. I wouldn't use it around these strategies, no. Because you'll find, for example, I can't remember the names of these things now, such a long time ago, but for example, this might be below a certain level, and then you're not supposed to trade it long on Ichimoku, so I would be trading this long, for example, and you're not supposed to do it on Ichimoku, and those are all the trades that you were missing out on that system. I remember it was crazy because it was on that side or on that level, and then all these trades that you could have taken, you couldn't take, and there was a whole bunch of things that were annoying me with that system, so we didn't trade it. No, that's for sure. Now, I just want to see, and it says I'm confused because the chart shows on a downtrend, but then short term it's on an uptrend, so which would you pay attention to? Would you have taken the trade when the lower trend got broken? So what you have to understand here is, yes, you've got a downtrend, right? But that's the third way we trade. That's counter trade, okay? So the first way we trade with a trend. So as long as it stays in the trend, we'll trade in that trend. The second way is in the range. We'll trade in that range. And the third way is on a counter trade. And a counter trade is when it breaks structure. So on this downtrend here, on the short term, remember we're trading on the short term here. We're not investing for 30 years. Here we're trading for 4 hours to a week, whatever the case. So on the short term, it broke the structure. It broke the trend and went the other way because we drew the trend in short term and it broke that trend short term. So that's why we took the long. It also confirmed that because it was breaking out of the daily support level, the support level in the range, because it does trade in a range. So you've got two confirmations here. You've got it coming down to the support level in the range because it's trading in a range. And the range, you can trade it off the bottom, off the top. Excuse me, guys. But now you want to trade it off the bottom, but hit a luck. Not only are you trading it off the bottom, you've also got this little trend resistance that it broke through, giving you confirmation that you can literally trade it off the bottom and go long. Is it going to go long forever? No, it's going to trade within its range. Most likely stay within this range because there's the top of the range. There's another top in the range here. So, you know, it's probably not going to go much past these levels. It's a short-term trade. Remember, it's not, you're not trading it to 100. And oil in general, if you know oil at all, you'll know that it trades generally between 65 and 105 on any given day. And that's where it stays forever. This is not an investment. You don't invest in Brent crude oil because it just moves up and down. It's a cyclical stock. In fact, you'll find that all commodities are very cyclical. They just go up and down. It's not like investing in a retail store or in Coca-Cola or something like that, where it just keeps on growing year after year after year and giving you something back. Brent crude oil, like other commodities, will just go up to a high and down to a low. Up to a high, down to a low. That's what they do. At the moment, Brent crude's trading between 70 and 80. That's where we are. And we know that it's been trading like that for a while. So we'll just keep trading it on those levels. You got to pick up these patterns in the market as well. It's not just about lines. Sometimes you know that this is trading between 70 and 80. So, hey, it's at 70. Maybe we should give it a buy and see if we get to 80. You know, that's kind of what we look at as well. Shane, average true range doesn't work on higher time frames. It only works on the lower time frames. And okay, I could be lying, but it doesn't work for me on the higher time frames. I'm not a big fan of average true range. On the lower time frames, it'll probably help you a bit. But what you got to watch out for as well is getting caught up in too many different systems, getting caught up in too many different things, and you're going to start confusing yourself, or you're just going to start doubting your own trades because you've got too much information. Information overload with high probability systems can be a problem, and it can hold you back from taking the trades. So do be careful of that. Don't give yourself information overload. I've actually seen traders with 200 million lines on the chart here and 24 screens on the wall, and I look at it and think, how do you even know what's going on? How do you even know where to start? I mean, you got to have eyes all over the place. No, try and keep it simple, guys. Try and keep it as simple as you possibly can, and you'll be better off at the end of the day. Probably I think like that because I come from a long way back before we had all these lines. And I look at things for what they are. Okay. So would you have gotten in it when it broke the trend line with the green candle? We got in it over here. So where we got in it is a little bit, you see it broke the trend line, but it was still in the support. So a little bit of patience, a little bit of, confirmation goes a long way. So we got in a little bit after the line, but out of the support, out of this main support, we got in at about 71. And then it took us out at about 73 odd, which is fine. And then we're looking to get back in again. Had it not taken out the trailing stop, I'd still be in the trade actually. But now that that's there, I'm just waiting for it to confirm and go up, and then I'll just get in again. And you just lose that 1 point between 73 and 74. And then it goes all the way back up to 80. That's fine by me. So yes, yeah, we didn't get in immediately after the line because of this big support level here. That's why I say the more things you draw in, or the more information you put on your chart, the more you question your trade, or the later you get into a trade. Had this not been there, I probably would have just got in straight after the line. But because there is a major support, we waited. gave it a little bit of patience and got in just a touch later. Yes, Grizzo, there is. Wow, you know, Grizzo, I looked and I've got so many videos out there now, but yeah, there's plenty of videos that give you the information on the strategy and system and drawing the lines. Yes, plenty. Cheers, Kevin. See you on the next live on Tuesday. Have a good one. Thanks for joining us again, Kevin. Good to have you on board. Don't forget to drop your likes. And we'll see you and catch you on the rebound. This Thursday one is later in the day for me as well. So, but not so bad. Not so bad. It's actually okay. But S&P, why do you have to go down? Okay. Would you draw a new trend line on the bottom of the new trend? Always, if you want to. I don't draw too many lines on my charts, but if you want to, you can draw a new trend line through here. I just haven't bothered. I would actually short term actually draw it up here just to see what it's doing. But I'm actually watching it on this supply level here, which is good enough for me at the moment. But yeah, you can draw another trend line through here if you want to. You can draw a longer term one. The short term one is good just to see if it changes direction. That's all. On the short term, obviously. 12:23 a.m. in Australia. Wow. Sydney. I forget that Australia's got different time zones. It's a bit like America. You've got different time zones. In South Africa, we only have the one time zone, GMT +2. That's it. And yeah, I mean, it's basically 3:30 in the afternoon. No big deal for me. I'm not sitting there at 12:30 at night. Yeah, I know. But I actually find living here, the time zones are not too bad for trading around the world. But I do struggle with your side, Shane. You know, the Australia, New Zealand side, and China, Japan. You know, I'm usually sleeping when things go crazy on that side, and affect the trading as such. What we do need to do is keep an eye on the US 500. Look, it's probably going to fill this gap and see which way we go. How's the gold trade going, by the way? So glad we did the opposite to what Shane wanted. No, I think it's going to come down and take the money here and then bounce back up again. 13.25 in England. Yes, it should be. Yeah, totally. England's good because the time zone's close enough to us. It's normally an hour or 2 hours, depending on the time of the year. And I'm glad about that because I do like to watch the Premier League football and that sort of thing. So that helps me because it stays within my time zone a little bit, not too bad. Yeah. Ryan, are you up for the year so far using your system? Actually, Ryan, we're having a bit of a tough year. More like break even. It hasn't been a great start to the year, to be perfectly fair. And this particular trading account for you guys as a group is also a little bit down, but not big deal, not end of the world stuff. My cash account is up, but minuscule. It hasn't been a good start. But then I look at an annual thing, so I'm not too concerned about that. It's okay. But my investments, on the other hand, even with the S&P going down, are way ahead of the game. They're going so well. So on that side of the game, I can't complain at all. The time in the market always works. The investments always work. But that's year on year on year on year. You know what I mean? That builds up. But the trading side this year, I must say, it's been a tricky start. And I don't know if it's got anything to do with the politics or if it's got anything to do with the way things have been going, but it has been a tricky start. And even a person with my years of experience has looked at it and thought, what's going on here? But yeah, the system normally does work, and it works over time. It takes time. So not always perfect. Not always perfect. You get good days, you get bad days. You get good months, you get bad months. Hopefully we're not going to have a bad year, because that's the last thing I need. A good year is what we all want. But overall, over the year, hopefully things do what they're supposed to do. But they always do work out. You know, the whole problem with this strategy is you're going to take losses, but what you're waiting for are those wins, those decent wins. What's been happening in the market this year, as far as I can see, is we've been getting spiked out on the stops, which means our wins haven't been big enough because we keep getting spiked out on the trailing stops by someone standing up and saying something silly. That's one of the biggest issues. Yes, Shane, fundamentals is all I use for my investments. And you know what my fundamentals often are? Is just looking at the business and seeing it do well. If I see a business or a big company that's really looking successful and doing well, I'll look at the forward price to earnings ratio, of course, and I'll have a look at the financial statements. Who's the CEO? Is there any fraud involved? All that sort of stuff. But obviously, if I know it's a good company, I'll just buy it and set and forget. And what I normally do is I just add to what I've got, and I've got quite a lot, so I just keep adding to the existing ones. There's not a lot of new ones that I'm looking at right now, but yeah. And if something happens within those markets, then I look for those gaps as well where I can buy in again. That's the only area in the world where I'll dollar cost average effectively, because if something pulls back, I'll just throw money at it if it's a good company. But just recently, I think I mentioned it in previous videos, Anheuser-Busch pulled back and I threw money at it and it shot back up again. Perfect. Absolutely marvelous. So yeah, you know, and you know that that's a good company. I mean, come on, they sell beer, for heaven's sakes. Can't go wrong, eh? So yeah, if you use the price to earnings and you look at the company and you look at what you got, but I actually walk around and I see companies and I see what they're doing and I see how they're growing and I think, that looks like the area to go into. It's like when NVIDIA, when everybody was hyping NVIDIA, I got in as well. I mean, why not? It's everyone said this is going, so I went for it and I'm very happy. The Amazon, what a great company, doing really well. And even Coke. Do you know why I invested in Coke? Because Warren Buffett was invested in Coke. That was my choice for that, you know. Yeah, you know, when investing, you look at something completely different. It's not like trading where you're looking at squiggly lines and high probability trades and that sort of thing. So yeah, no, it's totally up to you. But yeah, as far as the strategy and the system goes, yeah, it's been a bit of a tricky start to the year, I must say. Ryan, I don't invest in gold. I'll trade gold. Definitely trade gold. And we have been in gold a few times this year. Probably did well for us. But in and out. I don't invest in commodities because commodities are cyclical. Cyclical means it goes up, it goes down, it goes up, it goes down, but like Brent crude oil. So, you know, it's got its highs and its lows. Now, gold does look great at the moment. I mean, obviously, it's making me look like a fool here because it's shot up to 3,000. But if you go back to the beginning of the S&P, or just go back 50 years on the S&P, right? 40 years. Let me not be crazy. Even 30 years. Just go back, right? And then at that time, take the S&P and take gold and invest in the same amount in both of them, and you would have come out hundreds of times better on the S&P. So, yeah, because gold just did nothing for so long. So, like I say, it's a very cyclical thing, commodities. I'm seeing gold do well at the moment, and I'm seeing this wonderful run. But in general, 9 times out of 10, you're going to do much better on the US 500 than you are on gold. Just saying. If you catch it at the right time, obviously, but because you'll see it also does these divey things along the way. But yeah, investment wise, what I do is I don't invest in, well, I do invest in the index actually. Sorry, I'm lying to you. I do have an investment in the indexes, ETF or EFT, exchange traded fund, sorry, ETF. And yeah, I do actually have an investment in that as well. So disclaimer, I do. And, but 99% of my investment is in separate shares. Okay. So I invest in different shares in America. I invest in different shares in South Africa. I invest in different shares in the UK. And those portfolios grow over time. Every month, I add what I can into a share or a couple of shares. And I've got a set monthly that I look at and I sort of put in there if I can. And that grows over time. Some of them are dividend-paying shares, and some of them are growth shares. And I try and keep it below 20 if I can, because it's set and forget, and it's a lot of different companies. But it's worth it. It's worth it because if you watch my last investment video that I put out, you'll see how much money you can make over 30 years if you're a young chap. You know, a young guy, if you had $1 million, I wish I'd had $1 million 30 years ago. Unfortunately, I didn't. When I started trading, I had basically nothing. And we didn't have leverage trading or anything. I didn't know how I was going to get around this game. It was insane. But if I'd had $1 million then, it would have been quite plain sailing now. But I didn't. And at that particular moment in time as well, I also didn't understand that you should invest in set and forget. So it took me a few years to figure that bit out as well. So I don't have the full 30 years of investment either. But that's okay. You know, still got a lot and still got something. So that's good, you know, at the end of the day. But if you are young, like I say, you can learn from my mistakes. You can learn from what I didn't do. And if you're a young chap now, don't do what I did and not listen to the older guys. Do yourself a favor. Start investing now, whatever amount you can. Put it into a few shares and just keep on adding. In 30 years' time, you'll be wealthier than most men on the planet. Okay. Do you invest in gold? Okay. Could one DCA using fib retracement? Shane, you know my feeling on dollar cost averaging, eh? No dollar cost averaging. Investment you can. On investing you can. But on trading, no dollar cost averaging. Okay. You don't, at least to the downside. If you're in profit, you can dollar cost average. If you're in profit, add as much as you want at any time. Go mad. You can do it with fib. You can do it with whatever you like. But if you're losing, do not dollar cost average. Do not try and add to your trade. It's just going to get worse for you, mate. It's going to go bad, okay? It's going to hurt you. It's going to shut down those small accounts, right? They're going to disappear. It doesn't work. For example, we see the S&P going down here, and it gets close to the stop loss here. And Rob goes, you know what, let's dollar cost average this. So we dollar cost average it, we double the trade, and it goes further down. And it just gets worse and worse and worse till the point where the account's closed. That's what happens. Best thing you can do, stop loss. Walk away, take a new trade when you're ready, okay? Don't dollar cost average. I buy the actual share, Ronald, and I'm using in South Africa what we call easy equities. You can also use the banks, FNB, Standard Bank. They've all got facilities for it. I do have a small portfolio with the banks, but easy equities is the cheapest, and they allow you to buy all over the world as well. You can just tell them I want an overseas account, an offshore account as they call it, and obviously there's a little bit of paperwork and, you know, the tax thing and all that. You're allowed to take a certain amount of money per year out of the country, And in doing so, I invest in those shares. And it grows overseas. Perfect. Okay. Just bear in mind, I know with these equities, for example, if you invest money in, you cannot withdraw it for within 15 days. Okay. So if you put it in, make sure you know it's staying there. Okay. But it's a set and forget investment. It's not a trade. So you're going to put it in, forget about it. You're not going to come back and take it out. You're going to leave it there for 30 years. Okay. So yeah, they offer, in fact, they offer most countries in the world, I think Germany as well, and all of them and whatnot, but you can't have too many. But yeah, then you just invest with them. And that's one-to-one. There's no leveraged trading there. That's if you've got $1,000, you invest $1,000, you own $1,000 of shares. Okay. There's no leveraged trading there. But it is very cheap. The guys are good. Okay. Gold and silver is part of my investment, but tech is my main investments. Okay. What you got to look at, Ryan, is see when you say, have you looked at Dow to gold ratio? Some people believe we're headed for a major correction. The economic weakness in South Africa is a definite. There's absolutely nothing we can do about it in South Africa because one of the big problems we have, for example, is Donald Trump just withdrew our funding. Basically, there's a bit of a political war going on between our government and them, and they're all idiots at the end of the day. And unfortunately, that's causing a problem for South Africa. Our rand is so weak, it's insane, which is, I don't mind because I got quite a bit in dollars, so that's great. But yeah, the country itself is really suffering. People are hungry. It's really, the economy here is bad. But the economy in America is being repaired by the guys that are in charge at the moment, seemingly, and that's doing quite well. When people call and say we're looking at a major correction, economic weakness and all that, I've seen it all before. I've seen it hundreds and hundreds of times before. It's not my first rodeo. Normally, you'll start seeing the crash on Friday afternoon, and by the following week, you've got this major correction. But there has to be a catalyst for a correction to take place. A major catalyst, not some small, people talking and saying there's a correction coming or whatever. What is a correction? A correction is 10% of the market. And what's a major correction? The worst I normally see is around 30%, 33%. That's like a crash. Okay. 20% is a really deep correction, and the average is around 10%, 10% correction. So yeah, I'm not seeing this at the moment. I'm not seeing a big crash at the moment because as far as America tends to drive the world around when it comes to these markets, and if the S&P holds up, then the whole world will most likely hold up with it. But I'm not too concerned at the moment. There is a lot of flutters around. There are a lot of stories around. Be careful of buying into this. Oh, there's going to be a crash. It's like all the years I've been watching the markets, I've come across these guys calling crash, 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 crash. This is the end. This is the end. This is what's going to happen next. Look at all this. What happened in the past is going to happen again in the future. And it's a bit like these guys who used to walk past on the street corner shouting, the end of the world is near. Okay? With a big sign. They used to stand with a sign and the end of the world is near. It's very much the same thing, guys. You see it all the time. I'm not saying there won't be. I don't have any predictive powers. I don't have a crystal ball. I honestly can't tell you what's going to happen tomorrow. But what I can tell you is I've seen it a million times in the market. I see it over and over and over again. In fact, I see it every single year, a couple of times per year. Somebody's standing there saying, big market crash coming, ooh, doomsday. And then everybody's too scared to buy. which probably causes a little bit of the crash or the correction. But a correction is actually healthy, because without a correction, you don't want to buy. So now with a correction, you're like, oh, no, I really don't want to buy because it's going to crash now. No. This has been quite a healthy correction that we've had here, which is why I looked at this as a trade. And I'm not even concerned about my investments or anything to that effect at the moment. Where I would grow concerned is if something major or a big catalyst happens in the world, then I become concerned, because then that's quite serious and that can cause issues. What's happening today? You see the little red candle and we're going, ooh, the S&P is going down. So our trade is in arrears. And what that actually is the money moving around. You know, they've got things to pay for and what have you in the US, and it's going to affect the markets in that way. Yeah, I don't think there is a big crash here. The bottom, for me, the bottom worst case at the moment is like 5,200. I don't think we're going to see 4,500 even, which is quite insane when you think about it, because the other day we were at 3,500. But anyway, that said, I've taken the long trade here, and now it's breaking to the downside here. I've just got to have a look at this trade, make sure it doesn't bite us. But where I am looking is it's filling this gap nicely. So what I'm thinking is if it fills the gap, okay, let's see what we've got here. If it fills the gap nicely, and you can actually move this now. You see, you don't have to be stringent with your thing. We're not in a bad position here. It's filling this gap over here. Maybe that's it. Maybe that's what we need today. Come down a bit and then shoot on up. I don't know if you've seen in the markets, particularly when they open, they tend to go in one direction, then they turn around, they take the money, and then they go the other way. They sweep the market, as they say. Okay. Yep, we're looking for long trades on the US 500. Totally. Somebody must move the markets. Market is moved by emotions. It is, and already this is where Reinhold's way on top of it. The market is made up of human beings. The market is made up of people, and emotions and psychology is what moves the markets up and down, not squiggly lines. You're not trading against a computer. You're not trading against algorithms. You're not trading against maths. You're trading with and against people, human beings in the market, putting orders in place. What is our job? Our job is to look for liquidity, to look for the money in the markets, and we take that money and we run with it. That's what we're looking for at the end of the day. And the market is moved by the emotions. But now, what you've got to be careful of there, Ronald, is the markets are moved by the money movements in a country. For example, let's use the USA as an example. So if the markets move down, it's that time when they've got to pay the army, when they've got to pay the municipality, they've got to pay people. So that money that's in the system moves out of the system, and these things move around, causes markets to move. Emotions move markets short term. So for example, somebody says something, does something, or feels a bit off about the market, then markets will move a certain direction, but only for a very short period, and then it will slide back into place. Whereas actual money movements move things in a direction, they sort of, that's it, that's for the day, they'll stay there. So there's different movements in the market that you've got to look at. But yes, emotions do move markets, and if a big catalyst happens in the market, or something happens in the world, then the emotions will move the market in a certain direction, big time, because that's a catalyst. People are scared. But, fear is the biggest thing in the market. Fear will move markets in insane directions. Okay. Actually, more than once, Ryan. I've seen it 2 or 3 times where cash was better than equities. But those are the best times in the world. The most recent one being 2008. Wow. Man, I remember buying shares for 4 Rand and them going up to 80 Rand later on in 2011. You have to understand that when a market crashes like that, at the time, it's it's soul destroying or worrying. But if you have your stops in place and you're not geared and leveraged in trading and you're out of the trades and everything's fine, there's no problem. And whatever stocks you're holding in investments, you just don't worry about it. And when it gets to its lows, you load up where you can. If you've got money, load up, right? But on the leverage trading, if you can buy at the bottom, my goodness, can you make a lot of money? So yes, if you've got a lot of powder, a lot of cash, and you can climb in when the markets are at their lows, that's insane. That's what makes you the money. Years like 2025, like I said to you, bit of a tough year, bit of a tough start. But these that's because the market started at the top. The market literally started at the top, and you're scared to short it because it just keeps on going up. So, it's really difficult to make money in a market like this. But if the market starts at the bottom, wow, you can't go wrong, man. You just make so much money when you get markets like that. So, I don't fear markets like that. Actually, it's in an insane way. I look forward to them. And, I think 2008 was the last. I think the one before that might have been 97. I can't remember the dates. And then before that, there was one in the 80s. Every 10 years, just about, there's a nice, decent 33% crash. And one of them was 50%. I can't remember which one. But I think 2008 was 33. It's so good when those prices fall like that, and you can just add, you can load up, and you can go mad. That's insane. Look, a lot of people, it's actually quite sad. A lot of people lose everything. A lot of people go down the tubes. But the trouble is, it's difficult to see it coming, because normally what I do to measure it these days, because I've seen it before, is I watch Fridays very carefully, and if I see things going pear-shaped on Friday, I sell all my leverage trades. I'm not worried about the investments, that's fine, but my leverage trades, I dump them all. I'm out. I'm gone. And as far as possible, I don't like holding leverage trades over the weekend, long in particular. So, yeah, I'm very careful on that front because I've seen it all before. It starts building up on the Friday. And then on Saturday, it really goes down. The news goes down, and you can't do anything. Your hands are tied. Now, remember, on the cash accounts, not these funded accounts, these are nothing. But if you've got a real cash account with money in it, and let's say you've got a $100,000 account. Now, you take a loss of over the weekend of $200,000 because you can't get out. It just goes way down. And it opens up on Monday morning. Your phone's going to be ringing hot. Your phone's going to be ringing hot because they're going to be phoning you and giving you margin calls. And they're not going to take the 100,000. They're going to want the other 100,000 as well that you lost. They want the money that you don't have. They want that too. So I've seen a lot of friends come short with that. And, well, not a lot, couple. But let me tell you something, guys. That is the worst thing that can happen to someone. It's a nightmare. You wake up on Monday morning and they're asking you for more money than you might have. That's insane. Okay, so do be careful of that. Those margin calls can be nasty. There's no guaranteed stops over a weekend. Yeah. And yes, I did go through the commodities super cycle. I did, yeah. I used to love investing in a lot of the commodity companies, the Anglo-Americans, the BHP Bulletins, and those types of things back in the day. And especially in the super cycles. And that was fun. But then I also saw the downside where, Anglo-American went from, I think, 600 Rand to 80 Rand. Some insane times. How's it, Daniel? Hey, good to see you again, man. Good to see you back here. Yeah, so is gold? Ooh, where's gold? Oh no, it's still going down, man. Shane, I thought it had gone up there already. For a moment there, I thought it had jumped to 3159 or something. Yeah, like wow, that would have been amazing. Yeah, no, we can buy in just now. Actually, it's gonna hit a nice spot here, perhaps. I'm just keeping an eye on the US 500. See, there she bounces off the gap, Shane. You see she's bouncing off the gap. and probably going to move to the upside now, which is great. I can't remember when the super cycle was. Was it in the 2000s or the 90s? I think it was the 2000s, actually. Sometime in the 2000s. I remember there was a super cycle. But commodities are, these days, I don't even bother with them. I stay invested in everything else. Tech is really good. Tech is a good one to invest in. A lot of retailers I'm invested in, banks. Yeah, some good stuff. Obviously, the internet companies like Amazon, stuff like that. Good stuff, you know. But I still stay invested in things like Coca-Cola and McDonald's and stuff like that because they're still good, you know, and it's not that bad. And the breweries, obviously, they some guys have got religious adversities to investing in breweries and things like that. But for me, I don't mind because they pay. It's good money. How's it, David? Good afternoon. Good to see you back, man. Good to have you on board. Yeah. So it's been interesting. Another fine, interesting session we've had here today, guys. Absolutely amazing. And if you remove the greed and FOMO from your trades, it becomes that much easier. Like I said, not trying to make you rich, just trying to make you guys competent, just trying to help you out here. And even if we break even, that's good enough for us, eh? Okay. Like I said, system and strategy are different. For those of you who haven't seen it, do go and make sure you understand the strategy. The system's easy. Go and understand the strategy. Go and get the strategy down, you know? Go and pick it up a bit because go back a few videos and I'll put it in every video. The last couple of videos I didn't put it in. I just made a few changes. I think next video I'm going to start putting it back because there's a few guys that are starting to slip away from the strategy here. So I need to reiterate what's going on with the strategy, man. It's important. Berkshire Hathaway. What's an expensive share? How much is it today, Shane? Yeah. You know, the thing is Charlie Munger's gone. And how old is Warren Buffett now? I'm just wondering who's going to get that company when he's gone. You know, that's my only worry for Berkshire Hathaway. I love the fact that they've done so well, but I think it's all down to Warren and what was, you know, the old Charlie Munger and that. I just wonder where's it going to go if Warren's gone, because he is really old. I'm just being real here. You know, he is really old. But yeah, that was a fantastic investment, a really, really expensive share. Yeah, I get that you can get the RNO, you get the cheaper one. I guess you invested in the B. Grizzo, Rob, check question above from me. Grizzo. Oh, sorry, Grizzo. Missed it. I'm just looking for it. Rob, do you redraw your levels at the start of each trade day or do you leave them up for a week until invalidated? Sorry, Grizzo, I didn't see your question. What I do is, in most cases, to be fair, I leave them. Okay. I'm a lazy old man, right? To be fair, in most cases, I leave them. But to be fair, most cases, you don't need to change them. But I also do look at the chart, and if something looks a bit off, I will take them off and redraw them. Okay. Because particularly if I'm really thinking of taking a trade. So if I look at something and I say, I'm thinking of buying the S&P 500. Believe me, I redrew these levels, okay? I'll leave the levels because there's a lot of levels to redraw. But let's say I go to the New Zealand dollar, US dollar, and these levels are in. They look pretty capable. They look okay. But what I'll do is I'll just go up to the day chart and just see what they look like. Do the levels still look relevant? Pretty much. And I could draw another level in here, most likely. So what I'll do is I'll go, all right, I can add a level to this. This is if I'm really thinking of purchasing or something, and I'll draw the other level in, or in other case, maybe I'll draw the level this way, depending on what I'm looking for. I'll say, okay, the levels look all right. I'll stay with those levels, go back to the 4 hour, and make my decision. That's kind of what I do with the levels. But I won't go and redraw every single level at the beginning or every day. Okay, at the beginning of every day. I'll do it for the week, and then that's it for the week. Okay. And unless I'm thinking, like I say, of doing a purchase, then I'll normally go in and just make sure the levels look good. And if they look a little bit off, I'll just redraw it. So yes, to be fair, I do kind of leave the levels there. But there's always an if, a but. But I will change them if I'm looking at putting money in or doing something real. Okay, where's the S&P 500 support level you have on your chart drawn from? Jane Zimmerman, I'm cheap. I love that. Okay, we're on the S&P 500. Yeah, okay, let's go and have a look at where this is drawn from. And then, there you go. So you're on the day chart. This is actually a recent drawing, I must say. Okay, I drew it recently. I remember this clearly because I was contemplating if I draw this one in or if I draw this one in. But what I actually did, this one's too far away, this one on the far left. So what I did was I thought that one and that one looks good. This isn't the most amazing support level, by the way. But I looked at it and I thought this one looks more reasonable. It goes all the way back to, you see where it hit that high? So it went up, hits a high, came down, went back up, broke through, went up, came around, and broke down to this level. I looked at that as, that looks like a reasonable low. And then this is the next low over here. Not the best, because there's only really 2 touch points. This one's probably nicer because it's up here. There's 1, 2, maybe 3 touch points on that. But you could draw this a lot wider. You could do that. But I didn't want to. My opinion was I'm going to take it from that high there, based on the fact that that just looks like it broke through and came back. That looks like it broke through and came back. I'm going to give it this level up to there, and that's why the support level looks like it does. Now, if you were to take this further back, which you can't on here, you'll probably get an even better level. If you go to the weekly, probably get an even better level here. We'll just go to the weekly, see what we got here. Oh no, it's actually not going that far back on this chart. Probably due to the instruments that they've got. What have I done here now? Okay, let's just see what we've got. Alt 2. Let's make the chart a little bit better. There we go. Okay, hopefully that makes sense for you. You can go short if you want on anything, Shane. If you find something to go short on, go short on it. But are you long on the S&P 500, the US 500? Because there she goes. Hopefully. Okay, so what we got here, we've got 2 sells. We've got the Euro Great British Pound sell. We've got the Euro US dollar sell. And we've got the US 500 buy. The one we had the other day from Shane, we lost. Okay. Right, so you guys have got that. Got that one good. Okay. We actually came short on this last trade here. This Great British Pound Aussie dollar was such a nice short trade. We were so in profit, and it went back and took out the stop loss, like I said, while I was having dinner. That's the one thing. You've got to keep your emotions in check. You feel like running upstairs to the office, getting onto the computer and doing a revenge trade or getting back into the trade. And you shouldn't do that, which I didn't. I just woke up the following morning and thought, gosh, we would have been in profit again. That was insane, that trade. I was like wondering how that happened. And this is all obviously due to it's just the way things are this year. Like I said, I think one of the problems this year is we haven't started on a low. We've started on a high. We've started at the top. And it's going to be difficult to fight our way to the top. You'll find markets, they really battle their way up and they fall down much easier. They sort of slide down. It's like one of these like slippery slopes. They just fly down and then they crawl back up, you know, they claw their way back up to the top. That's what markets do, always. Without fail, every single time. We're already long on the US 500. Just set out on $1,000 trade and just watched it go to take profit. Set for it. I set for it. So, so you made the 1,000, Daniel, or you weren't in on it? You were not in the trade. Okay. Those are the worst ones. I hate those, Daniel, where you see a trade and you think I should take that trade, and then it goes and it plays out, and you think, why didn't I take that trade, man? Why didn't I take it? Yeah. You got to take the trades, man. Got to take the trades. That's. Sometimes you're going to lose. That's the thing. You know, you win some, you lose some, and especially this year, it's been tricky. And but you got to take the trades, otherwise you ain't going to be in the game. Okay, so just keep it simple, guys. If you want to take a trade, if it comes out of the resistance, look for the red candle. If it comes out of the support, look for the green candle. Take a trade. It's 50-50. It's either going to work or it's not going to work. The trick is just to manage your risk. As you know, we manage the risk. And all you got to do is go and work out where the stop loss is going to be. 1% risk on every trade. Take the risk, put it in there, take the trade. Worst case scenario, you're either going to lose or you're going to win. But what you're trying to do is win more than you lose. Now, yesterday I worked out a trade on the S&P, and it was insane. If you now listen to this, I think Daniel and Shane should listen to this big time. Look at this, guys. I put a stop. If we've already got this trade in, right? So we've only got 0.02 lots in here, right? But imagine you take 0.07 lots at this price for a buy on the S&P with a stop loss at 56.40. A little bit of a higher stop loss here, but it is quite far down, okay? And that's $232 loss. And you want to take profit of about 6,000, okay? Take profit of about 6,000. Just trying to get it in here. It's just trying to drive me insane. Not to worry. 6,000, not 60,000. Goodness me, 6,000. A profit of, no, not price. Goodness me. Yeah, 6,000. That's better. Now we've got a price. Okay, so now you got a profit of 6,000. You've got a stop loss of 56.40. So you've got a much closer stop loss here, but it is relevant, right? So if you take this trade at 57.07 on a buy with a stop loss of 56.40 with a risk of $234, you can make $1,000 if you take that trade. Now, you got small risk, but it's a trade you take. It's 50-50. So if you're prepared to risk that money on that small stop loss, you can. See what I mean? So you can make quite a big profit if you take the trade like that. Trouble is, 56.40 is not an impossibility to get to. You're taking that chance. But it's just a closer stop loss. Now, if you're like me and you've moved your stop loss out a bit further, and you've got less contracts, less lots to make that loss, then you're not going to make that much money, but you're still going to make there's still going to be a good $500 profit or $600 profit, yeah. But that's just something I looked at yesterday for someone, and that's kind of where you could come out with a trade like this. So there's money to be made if you take it. Yeah, no, they are there. The trades are there every day. They're all available to take. Somebody asked me about the Ichimoku earlier. You're just overcomplicating it. I tried trading it for about a year, actually. Yeah, it's easy to trade, actually. It's actually very easy to trade. It's a long time since I've used it, but very easy to trade. But it just didn't make me money. It just wasn't there. Maybe it was one of those years, I don't know. But it just wasn't there. Okay, guys, I think that's it for today. It's been a wonderful day of trading and fun and talking and chatting, and it's been a fantastic video as usual. We've been having our fun as always, and I hope to see you guys on Tuesday for the next live show. Don't forget to come back and watch tomorrow's fantastic video. Don't forget to like, subscribe for those who haven't. And I think I'm going to be on my way now. Go and feed the dogs, go and relax, go and enjoy life. And hopefully the S&P will go up instead of down. That's what we want it to do. And it's a pleasure, Shane. Thank you, guys. Thanks for being here. Thanks for your time being here. It's lovely having a crowd together. It's lovely being with you guys every Tuesday and Thursday. I enjoy it. I'm sure you enjoy it. Otherwise, you wouldn't be here. And I'll see you guys on Tuesday again, 11 o'clock GMT +2. So it will be a bit earlier for Shane, who's in Australia at the moment, probably 1 o'clock in the morning, maybe later. That's an insane time. But yeah, it'll be a little bit earlier for you, maybe in the evening or whatever the case on Tuesday. Guys, thanks a lot. Daniel, thanks for popping in. Good to see you again. And guys, all of you, it's good to have you. And Grizzo, cheers, bud. Cheers. Thanks for everything. Take it easy. Keep your feet on the ground and reach for the sky. Cheers. Ciao.